Welcome to another video of Hoot and Poop. So this is the third installment of the Clearpoint Neuro. Okay, I hope you have enjoyed the last two videos. If you have not done so, please watch it before we watch the third series of it. If not, you will probably be lost in this. Okay, so now the third series of this Clearpoint Neuro, I will be talking to you about the financials, right, as well as the valuations. Okay. So first thing first, before I move on, okay, every time when I talk about financials, if you recall my IFAS video, okay, I said, that when we talk about looking at financials of a company or valuation of a company, right, even though the company can be loss-making at this moment, but what's important is that the company's revenue must be growing. Because if the revenue is not growing, it's very hard for the company to progress. It's very hard for the share price to progress on. Okay, now company can have negative earnings, means to say it's not making a profit at this moment because they are growing, and that's fine. Okay, now based on the latest quarter, all right, for Clearpoint Neuro, okay, you can see that on my left hand side, number of cases has actually been growing. Unfortunately, in 2020, it was being hit by COVID. That's why it dropped down to 682. But in 2021, okay, you can see that it is growing healthily. Okay. Now, over to the revenue, okay, it is growing at quite a pretty rate, if you ask me. Okay. And of course, all right, I would like to do some analysis on this whole thing. First, why a growing volume is good? Because the growing volume, right, it just means that there are more customers of Clearpoint Neuro that is using their products, and with more customers using their products, it will generate more revenues. Okay, and this also proves one thing: more customers using their products, and it's a growing trend. It means to say there is a product market fit, and this is something very, very important when we look at companies. Okay, so if you recall my first two videos, I talked about, Clearpoint Neuro based on scholar articles, right? They have a superior product, a more accurate product compared to the legacy MRI kind of concept. And number two, in terms of the experience that they give to customers, okay, with the Asleep DBS, it's better. Okay, it's a better experience. So a good product, or rather a superior product, a better experience. And the third thing now is that an increase in volume means to say there is a good product market fit. So these are some things that we have to read in between the lines when we invest in any company or when we analyze the company's product. Now, back to the revenue. Okay, so although the growth drivers of Clearpoint have 4 growth drivers, but there are only 3 that brings them revenue, because the last one, in terms of global outreach, caters for all sectors. Okay, so if you look at it, you can see that 2021 has shot up quite a lot. Okay, so till now they already have about 16 million of revenues, compared to 2020 is 12.8, etc. Okay, but I have to be very cautious on here, because it's not all good news and so on. Yes, even though the figures have shot up from 12 to 18, okay, but you have to understand that in 2020 there is an impact of COVID-19. So I do expect some pent-up demand from Clearpoint Neuro, given that the fact that there is an increase in terms of the cases, as well as a huge spike in the revenue. I feel that there is a pent-up demand for it, and this is a pent-up revenue. Therefore, I don't expect 2020 to have the same high spike as well. Okay, in fact 2020 might be even lower a little bit, depending and so on. So these are things that you have to be very cautious about. Okay, now moving on to valuation. So how do we know whether it's a fair value or not fair value? First, based on the current EV at this video, okay, it's about 400 million, around there. Okay, now the trailing 12 months revenue, it's about 15 million thereabout. Okay, and I estimate an operating margin of 30%. Right, the estimated EBIT is about 4.5 million. Okay, so given the estimated EBIT is 4.5 million and the current EV is 400 million, it turns out to give me an 88% 88 times, sorry, the EV over EB of 88 times, which is hugely overvalued in my opinion, given the current situation. Okay. However, okay, I want to take note on this thing called the TAM, or rather total addressable market, as well as, what's the opportunity for Clearpoint Neuro. Let's just look at the purely biology and drugs delivery, where I said that, it depends a lot on their partners getting FDA's approval. So their partners like PTC, Blue Rock, Lysogen, Unique, Charles River, etc. So there are a total of 35 partners. Okay, as you can see, okay, in 2020, they expect, the AADC deficiency to about 12 mil. Okay. Look at, Parkinson about 1.2 billion, lysoblastoma is about 2.4 billion. Okay, they're about here and there. So now the thing is that a lot of times when we invest in such loss-making company, or Clearpoint Neuro for this case, it's a lot hinged onto our expectation of what they can hit in the future. Okay, it's not about now, it's about investing for the future. Okay, so if you realize, based on the current revenue, it's about 15 million. Okay, now looking at all this potential, let's say we just take the largest one, okay, which is glioblastoma, right? Now, based on this, the estimated, it's about 2.4 billion, right? If we just take a 10% of it, so with that, right, you can see, let's estimate a 10% of what it is. It's about 2025 revenue is about 100 million. It's purely estimation. Okay, I may be wrong, and in fact, if you ask me when I invest, right, you always think what's the downside. So I will be wrong, or I may be wrong. Okay, and if I'm wrong, then this is the price to pay for this kind of investing. Okay, but if you are confident that they will hit 100 million, then the upside can be quite substantial. All right, so to me, I feel that it is possible by 2025 to hit 100 million because of the opportunity that they have. Right, even though they estimate 1.5 billion, I just give it a 10%, or rather, I just give it a 10% estimation. All right, of it is about 100 million, and that's it. Okay, so operating margin, I stick it to 30%. Okay, my 2025 EBIT, I will have 30 million. Now, I estimate my EV/EBIT multiples to be 30 times. Okay, this is my exit multiples, right? You will always need some more exit multiples estimation along the way. Okay, so if I estimate the EV over EBIT to be 30 times, my 2025 EV will be 900 million. Okay, so the question is that if I buy my shares today, which my current EV is 400 million, I buy it today, okay, and by 2025, I'm confident that it will grow up to 900 million based on this revised valuation, then the potential upside is huge. Okay, so now this is how it is when you talk about investing. Investing is about investing for the future. Okay, of course, there are some kind of investing styles where you invest in a safe and stable kind of company, relatively speaking. Okay, like Google, Facebook. In my opinion, they are relatively stable, profit making, generating revenue, growing at a stable rate. Yeah, that's okay. But if you want to invest in growth companies, where invest in the future, then these are risks that you have to be able to cope with it. Okay. Now, looking at all this, okay, there is a huge potential upside if you ask my opinion. All right. Now, before I go on, okay, looks very nice, looks very positive. I want to warn you with the risk that is in it. The first, number one thing is that they are burning cash. Okay, even looking at the latest quarter, okay, the cash flow from operations, it's negative. So meaning to say they are burning cash. So if their revenue, can't keep up with the cash burn, it will hit the company financials really hard. Number two, it is still a loss-making businesses. Even though they may have revenue, but after deducting all the costs, it is still not a net profit company. That's something that you have to take note, you have to be comfortable with. The third one is that, because as I said, a lot of the drugs delivery hinge onto the partners obtaining FDA approvals. So if their partners fail to do so, failures, in obtaining the FDA's approvals by their partners, which is 35 of them, okay, then this will hit them hard as well. And the fourth one is that, doctors, medical professions, they're already very used to the legacy MRI way of carrying out brain operations. So whether or not will they be willing to adopt a better solution, a better features, is something that is questionable. Okay, yes, even though they may have obtained FDA approval for some, but whether or not is it being widely used. And don't forget, one of the growth driver for Clearpoint Neuro is that they want to hit a global outreach. So currently at this moment, they are only, main focus is in US, Canada, and a little bit in, other parts of Europe. But this is not enough. They want to go global. So in order to go global, they need to be able to counter the resistance coming from the doctors, for the medical professions of using Clearpoint Neuro. Okay, so with that, I've come to the end of my Clearpoint Neuro, and I hope that this video gives you a clear understanding through the thought process of it. Now, please take note that whatever I'm sharing now, it's purely for educational purposes. It's definitely not a recommendation to buy or sell them. Please seek professional advisors for any advice that if you need so. All right. Now, another disclaimer I need to highlight to you is that I am vested in this company, so my opinions are biased. Okay, so please take it and do your own due diligence before taking any actions to it. Okay, so I hope you enjoyed this video. Please like and share, as well as to subscribe to this video. Okay, and with that, invest safe.